Exactly. I think it's a buy on dips. So clearly, despite the fact that the markets may see corrective, kind of reactions from time to time. I think one has to be stock specific, and I think the broad momentum for the market continues to be positive. I think clearly with today's reforms announced, clearly my sense is I think the rate sensitives, especially the autos, the infras, construction, capital goods stocks would continue to be into the limelight. And this was a well-awaited, reform measure for a long time. Actually, it also helps the rupee to strengthen, which is a good part for the market. So I think net, the market should continue to rally. 57.25 would be possibly a point where some profit booking would come in. But I think at that point of time, I think clearly one has to take a really medium to longer term call, because clearly with flows coming in so strongly, I wouldn't be surprised if the market continues to go up further.
Avinnash, it's banking stocks that are, in a sense, leading this rally. What's your call on the banking pack, and where would your bias be? Do you think there's value in some of the PSU banking stocks that have, been hammered a bit over the last year or so?
I think if somebody has enough risk appetite, I think the PSU banks definitely look attractive. And I think with the CRR cut happening and SBI taking the lead for cutting rates, my sense is I think incremental benefit from the CRR cut would obviously benefit the PSU pack. And here I think a Bank of Baroda, a Union Bank, or typically a Dena Bank, Allahabad Bank, these are banks which are yet trading, at pretty good price to book kind of multiples on FY13 numbers. So my guess is from here on, one could see a decent amount of 10 to 15% upside in the next say 6 months. I mean, maybe in the very short term, the action might be broad based or limited, but clearly 6 to 8 months down the line, these could be the beneficiaries.
So Avinnash, what does one do with the defensive pack, the likes of FMCG as well as pharma? Is it time to book profits, considering now the shift would obviously be towards riskier stocks, or the stocks which have been at the bottom end of the market?
I think clearly in one's asset portfolio, I think pharma and FMCG would definitely now take a lower exposure, considering the fact that, after a very long time, I think the rate sensitive pack has actually started moving. Reforms are clearly, benefiting the rate sensitive stocks clearly. So I think something like a Lever or maybe a Cipla or typically an ITC may not correct that significantly, but it may not even go up that much. So probably, it's better to just stay put on those stocks and clearly, focus more on the infra and capital goods and the rate sensitive names.
Avinash, what about IT stocks? Obviously, with the rupee strengthening, IT companies will take a bit of a knock. What's your long-term call on the IT pack?
I would, anybody holding a IT kind of portfolio probably can hold on, but I think fresh buying at this point of time, at least for the very near term, looks, I wouldn't be surprised if the risk reward may not be all that great, considering the fact that if the rupee further strengthens. I think clearly, these stocks are more or less inclined to how the rupee currency, behaves. So in the very short to medium term, say for the next 2 to 3 months, I would say they just hold on. I wouldn't, advise any fresh buying in either a HCL Technologies or a Infosys or a TCS. I think most of them are fairly valued. And with this new kind of, policy reform, I think for some time, I think you're going to see underperformance from the IT pack.
Avinash, so which pocket of the market do you think is actually going to lead the next leap forward? Would it be high beta, infrastructure, beaten down names?
It would be, because for a very long time, the infra pack, typically the rate sensitive pack, especially capital goods, construction, these were sectors which were beaten down very badly, obviously because of bad macros like very poor IIP and GDP numbers. But I think with these kind of reform related measures, my sense is the markets would probably take a punt on these stocks, because clearly valuations have come down, to very low multiples. In fact, something like a GVK Power or maybe, Reliance Infra, typically, which also was beaten down. I think clearly here the momentum would continue at least for the next, couple of quarters, at least till, October, November.
Avinash, thanks for joining in with that perspective on markets at lunch. That's treat view for you on the show. Let's get you another fundamental view then. C. Jairam, ED at Kotak Mahindra Bank, recommends adopting a top-down strategy for the markets. Currently, Jairam believes inflation concerns will ease from next year and that RBI may look to cutting interest rates in its October policy meet.
The FMCG sector valuations are extremely rich, so it becomes a little difficult to justify even remotely on valuation grounds, which means that then you're left with probably pharmaceuticals as a possible sector and to a lesser extent technology. So I think in the context of the Indian market where it's poised right now, I think you have to have a top-down call that there are going to be some reasons as to why the market will make a move forward. And if that is indeed the way forward, then you necessarily have to bet on some of the interest rate sensitives. Towards early 2013, you might start to see inflation sort of come off quite a bit. And if that is the broad prognosis, you could probably see the Reserve Bank in its October 30th policy do something to try and sort of get the growth momentum going.
Okay, still ahead on markets at lunch. Plenty of fundamental views coming in for you this afternoon. Markets testing the 5,700 level. So we're getting a whole host of experts. Nikhil Vora of IDFC comes in with a perspective up ahead on the show right here on ET Now.
And we'll also get you a global perspective with Kathleen Brooks, Research Director at Forex.com.
Yeah, we've met, remember? Now do you remember? Chola from Murugappa? Yes. My one truck, now 3. Thanks Chola Finance. My life changes. Oi Pali, एक प्लेट जलेबी ले आई हो? नहीं, celebration तो होने ही होनी है.
Bet we met, Murugappa.
Proven on global test tracks. Manufactured in 3 continents. Available in 118 countries. Apollo tires with U-First technology. Crafted for the safety of your loved ones.
क्रिकेट हो या लाइफ, जब तक बल्ला चल रहा है ना, ठाठ है बेटा.
बिरला सन लाइफ इंश्योरेंस के वेल्थ विद प्रोटेक्शन सॉल्यूशंस. जिंदगी के उतार चढ़ाव में जियो विश्वास के साथ.
Save up to 99% on every transaction on Sensex derivatives. Participate in the Sensex.
क्या
सुन,
हाँ बोल.
तू दयाल बाबू का बेटा है?
कौन दयाल बाबू?
Grow up to the new look. Verito.
Bringing the world together, building the world together. Binani Cement for generations to come.
Why do I trust VMA Wealth Creators? Simple. Superior research, superior networking, superior service. Really simple.
I'm confident that the business will win. There are going to be competitors from all over India, so it's going to be tough, but I'm confident about my business and the business plan. I wasn't too sure about participating in the competition. I was not very prepared. It was more of a conversation than a hardcore judgment run. It was more of fun for me, and it was great to win.
Catch Vodafone drive into the big league on ET Now, where one emerging business will get a chance to put its logo on the Vodafone McLaren Mercedes cars.
The New Age Women's View from the Corner Office is adding newer perspective and thought to companies' boardrooms.
Challenges are not about the workspace as much as they are about the life space.
Dun & Bradstreet presents Dare to Lead Roundtable Conferences, a forum on exchanging ideas and inspiring women to greater leadership roles in their professional world. Only on ET Now.
Back with markets at lunch right here on ET Now. It's not just us, but European markets as well supportive. They're holding around 0.5% across the board.
Let's get a perspective from Kathleen Brooks, Research Director at Forex.com. Afternoon, Kathleen. Thanks for joining us on Markets at Lunch. What are the cues that European markets are tracking for trade today?
Well, yeah, I mean, they've actually recovered slightly. We've seen risk actually come back a little bit. I mean, the key driver for that is that some felt that, actually markets are starting to look a bit oversold. So it's mainly been, the fundamental data out of Europe we know is bad. But what is quite, what's quite positive about this is that there does seem to be some steam left in this rally, because when we get to these very oversold levels, there are buyers coming in.
There's of course a lot of talk of Spain being in talks with the EU for a possible bailout. Is that also providing some sort of a support to the market?
I think that does, because I think, the more we hear about Spain actually going towards, accepting a bailout, the more chances there are that the ECB bond buying program will be triggered. And that is very important, because without that being triggered, then the ECB cannot act as the lender of last resort for the currency bloc.
Kathleen, what are investors now talking about? What could transpire as a possible war between Japan and China, and how scary could that be for equities?
Yeah, I don't think that's in any way being priced in. Not even in Asian markets, which also closed the day higher today. I think the markets are looking at it. They're concerned about what they see, but they're not expecting a full-blown, they're certainly not priced for a full-blown kind of conflict between Japan and China, because that's quite a lot to try and take in. If anything, people's focus has very much been on maybe conflict in the Middle East, rising tensions there. For it now to turn to, the Far East and between China and Japan, which is such a huge nation, with such important trade links, that's something that hasn't been on the market's radar. And if that deteriorates, then we could see, or continues to deteriorate, then we could see some risk aversion in the coming weeks.
Okay, Kathleen, good chatting with you. Appreciate you taking the time out as always. From equities, shift focus now to commodities. Let's bring in Manisha again to talk about how the commodity universe is panning out. Manisha.
Well, thank you for that, Aisha. Well, after one day of profit-taking, we have seen the New York markets pick up yesterday, and Asia and Europe really seem to be following suit. So you have seen good gains coming back in case of the crude prices after declining 7% in last 4 sessions. Yesterday and today have been good for this space. Also, there have been reports coming in about the North Sea and the Libya supply worries, and that is something that has been supporting this place as well. And of course, the stimulus coming in from most of those central banks, the 4 most important ones, it's something that would continue to bring in liquidity to most of these commodities. The going has been quite good for the precious metals, though. The crude prices have given some support in sense of inflation to the precious metal prices as well. So look at gold holding around 1770 at this point in time. That's a fresh 6.5-month highs that we have seen in gold at around 1775 in the Asian markets today. Most of the broking houses also have come out with a buy for the gold prices, including Bank of America and Deutsche Bank, who are forecasting record high prices for gold in 2013 and 14. And you have seen ETF holdings in the international markets and Indian markets as well continue to be on the higher side.
Manisha, thanks for joining us with that quick commodity update. Let's tell our viewers some trading strategies for commodities as well. Harish Kalipalli, head commodities and currency at JRG Securities, joins in on the show this afternoon. Afternoon, Harish. First up, what's your trade on gold? What would you advise traders to do, and what levels are you watching out for?
If you look at bullion prices, I think after a significant rally in the early part of this month, I think market is mostly consolidating now. However, I feel that the strong sentiment is still prevailing, and it is likely to continue further on back of continued or steady investment demand in the areas of ETF, coins and bars. I think the other than jewelry segment, I think the investment segment is likely to drive the prices further. So we are maintaining our bullish stance on gold prices, and as far as today's session is concerned, we are expecting prices to trade between 31,800 to 32,100 range. And as far as specific trading strategy is concerned, we are recommending to buy gold around 31,840 with a stop loss below 31,720. As far as targets are concerned, we could see anything between 32,000 to 32,100 levels.
Harish, what about your views on silver?
As far as silver is concerned, we expect again upward momentum, and market is likely to trade between 64,000 to 65,000 range. The levels are concerned, we are recommending to buy around 64,250 levels for a target of 65,000. And when stop losses are concerned, I think one can keep a stop loss below 64,000 levels.
What's your call on copper, Harish?
In base metal complex, if you look at, I think after making new highs and copper and other base metals are mostly seen consolidating. And if you look at, I think all these commodities are consumption related commodities, and now the biggest question is whether the rally that we have seen over last 2 weeks is sustainable or not. Because the prices are really on the high, and I think now here I think this consolidation is likely to extend further. And if you look at copper specifically, we feel market to trade between 450 to 460.